Hi, it's Bob Hoopshire, and this is the Gaining Perspective podcast, where we bring you insightful conversations with some of the top thought leaders in the investment advisor profession and investment management industry. I am the founder of Advisor Perspectives and a vice chairman of Vetify. With relentless market volatility and other stubborn headwinds, advisors must find an adequate portfolio balance for their clients. What role will alternative investments play in offsetting market challenges? In this episode, we dive into this question with Andrea Mody, U.S. Wealth Private Markets Head at Macquarie Asset Management. We will discuss how Macquarie continues to be a trailblazer for the democratization of alternatives, how traditional asset managers are reorganizing to incorporate alternatives, and the roadblocks for allocation, and Andrea's outlook for the space. Andrea joined Macquarie in 2007 and serves as its U.S. Wealth Private Markets Head, and she leads Macquarie's relationship building with wealth management platforms investing in private markets in the Americas. So, Andrea, you were a guest on my podcast 2 years ago. We discussed the democratization of alternatives then. You've since been appointed as U.S. Wealth Private Markets Head at Macquarie. For those who did not listen to that previous podcast, tell me about your career path, what led you to Macquarie, and your new role.
Well, first of all, thanks, Bob. It's great to be back on the podcast again, and thanks to Advisor Perspectives for having me back. I think my career began many moons ago. I won't tell you how many moons ago. I started actually as a management consultant, but I joined Macquarie in 2007. And I was really intrigued at the time by what I was hearing about this new asset class called infrastructure. And I'm still here, over 16 years later, because I fell in love with the infrastructure asset class. And I think, I've seen my career track the development and the maturation of infrastructure as an investable asset class, first for institutions and now for the wealth market. So it is really, it has really followed that trajectory. I spent most of my career on the institutional side of our business, working with pension funds, insurance companies, sovereign wealth funds, institutional consultants. But a couple of years ago, I was looking at the data and seeing where the real opportunity set was going forward increasingly individuals are going to be allocating to alternatives over the next few decades, and thought that this was the greatest way to make an impact to help bring these terrific asset classes into those individual portfolios. As you said, my current role is to work with to build relationships with wealth platforms, including the RIA market, and help get to know them and help them, help Macquarie understand where they're focused for their clients, and help them understand what our capabilities are in the private market space, and see where we can be a solutions provider for them and their client base.
So when we spoke a couple of years ago, Macquarie's alternative asset offering was focused on infrastructure. It's traditionally been a leader in that space, but you were looking to expand into private credit as well as other areas through third-party manager relationships. Tell me about what you're focused on now and what new offerings you've added.
Yeah, that's absolutely right. I mean, Macquarie is the oldest and longest standing infrastructure manager in the world. And in private markets today, we have about 225 billion in assets under management. And that cuts across infrastructure, across private credit, real estate, and private agriculture. To your point, we did in 2022 acquire a small investment manager called Central Park Group that primarily focused on wealth solutions for this market in the private equity and hedge fund realm. So we have absolutely been doing exactly what I said we were going to be doing. So we are committed to bringing both our real assets capabilities to this space, but also the highest quality third-party capabilities. And we think that's a real differentiator from what others are doing, because what we're trying to do is build a range of solutions for advisors and make sure that they have choice and a variety of solutions that they can implement in client portfolios.
What are the key trends that you're seeing across the alternative investment universe, and what has surprised you about the space?
I think I knew that there was going to be a lot of growth in this space, and in 2022, we certainly saw, record amounts of capital being raised for private markets and other alternatives in the wealth channel. And I think what surprised me is how quickly it slowed down in 2023, right? We saw the public markets denominator effect catch up with us a bit. So I think that was a bit of a surprise by the quick pause that we've had or slowdown that we've had. But I think in the medium term and the long term, the macro trends remain very strong in favor of the growth of alternatives. And we expect that that's going to be picking up. And in fact, we have seen that been picking up in the institutional side of our business. So from an asset class perspective, I think, probably no surprise with that general downturn in the macroeconomy that we've seen a lot of interest in things like credits, with the increasing interest rates. And we've also seen lots of interest in infrastructure, which is very pleasing, obviously, to us, and specifically within the infrastructure space in the energy transition. So, advisors want to still see that range. They want to see private markets as entry-level solutions. They also are looking for private markets on the upper end, the kind of the ultra high net worth sides of their business, because quite frankly, advisors are looking to attract other advisors to their businesses with strong suites of products as well. So, it's very much a function of where each firm is on their journey. And I think the last point would be just that we've seen a lot of platforms really focus on technology as a way to navigate this shift into the private markets to try and make that experience, less cumbersome for their advisors and clients.
I remember one of the things that we spoke about a couple of years ago was that you had a priority to address the packaging of alternatives into products that were more friendly for retail investors, for example, by lowering minimums and by simplifying tax reporting. How has that gone?
Yeah, I mean, it's going really well, Bob. I think expanding access to who has the ability to invest in these products remains a top priority, not just for us at Macquarie, but I think the industry in general. There continues to be a huge amount of innovation in we'll call it the packaging that's available and becoming available over time to advisors and their clients. And I think we've learned a lot, and we've been really encouraged by what we're seeing by the continued growth trajectory, particularly in the semi-liquid space. And, that's now cutting across ever increasing types of asset classes. We've seen, for example, infrastructure enter the market in a big way in 2023, and private equity continuing to grow as alongside, credit and real estate that have been present in this space for quite a while. So I think that that's really encouraging because that's helping bring advisors and new clients into the world of private markets.
How are traditional asset managers reorganizing to incorporate alternatives?
In a couple of ways, I think first on the capability side, if you look at the traditional asset manager space, they are really, seeing a lot of consolidation in the industry where they're gobbling up private markets capabilities because they recognize that organic growth, if you're a traditional asset manager in the public side, is actually very challenging to build from scratch. So we're seeing a lot of acquisitions there, and the cultures of private markets managers tend to be somewhat different. But that's even true in the public side. We've seen in the private side, we've seen large private managers buying capabilities that they didn't previously have, and we've seen a couple of big examples of that just in the last couple of months. So that's on the capability side, definitely building that out. And then on the distribution side, we see alternatives or asset managers in general building alternative specialists to complement their generalists out in the field. And that's really important because generalists have a really busy day job, right? They have a lot going on and they have a lot on their plate. And I think what we've seen is that, firms that find that having specialists who are experts in the alternative space really make a difference in helping the advisor get up to speed quickly and helping them explain to their clients some of the nuances of these existing and new products that are coming through the pipeline.
We also discussed the importance of education about alternatives. What is your advice for advisors who are looking to enter alternative investing?
Yeah, you got to keep at it or start if you haven't, right? This is definitely a huge macro trend in your industry and it's only going in one direction. So, you do need to understand it and you need to help explain it to clients to help future proof the outcomes in their portfolios. And so, we've seen a lot of educational resources come to the market, whether that's from the manager universe, the asset managers themselves, who've, I think, done a pretty good job of making education available to partners. But I think also some of the industry leadership has also started to build kind of, product agnostic, asset class agnostic type educational programs. And I think that that's really important too, that there's some industry bodies out there creating, neutral educational content, but at least from where we stand, it is our responsibility as managers to be an educational resource for advisors as they go on that journey, and I think would probably speak for other managers as well. We really want to be helpful to advisors as they go on that journey. So, we're looking to partners. So, please, if there's something we could be doing that we're not doing, we'd love to hear the feedback as well, because we know that this is not a flip the switch kind of change in portfolios. This is a massive undertaking, and so we want to be here to support it.
Well, we will include some links in the notes that accompany this podcast where our listeners can get in touch with you and provide that kind of feedback. I think there's a perception among many clients that alternatives are expensive, that they're illiquid, that they're not very transparent. What are advisors looking for to address those perceptions with their clients?
Yeah, I think you hit the nail on the head. In addition to the education piece that we just talked about, there is an ongoing requirement. Advisors really want clear communication from managers on an ongoing basis. These are long duration investments by and large. So I think they want to be updated along the life cycle of these, of these investments, whether the news is good or bad, right? They really want managers to be out in front of the news. And we certainly have seen that on the institutional side of our business as well. It's really important to keep that communication going. I think the evolution of features still matters to advisors too, right? There is a lot of innovation in this space that we've talked about, and it's not over, by any means. There will continue to be more friendly features on these kinds of products, and I think that they are looking for that continued evolution. So, for all of us to continue to push the envelope where we can make features, whether it's minimums, whether it's the tax reporting, whether it's more frequency evaluation, those are the kinds of things advisors are looking for us to keep doing a better job at over time. And then I think the technology is the last piece, right? So the onboarding is the upfront piece, but how are you doing, redemptions, and how are you doing ongoing reporting? Technology is clearly a need. We hear from every platform that we talk to. We as an industry need to continue to invest in technology here to make these investments easier for investors and their clients to follow once they get invested in them.
Education, technology, are there any other roadblocks that you see advisors facing when it comes to allocating to alternatives, and how can they be overcome?
I think a lot of wealth managers are thinking about access and what their alternatives or private markets platforms look like. So making sure that they cover all the asset classes and a number of strategies within those asset classes. So I think there's a focus there on building out, the product solution choices that advisors have. But I think probably the 2.0 on education is not just the why you should do it, but how you should do it. So what's the guidance that, we should be giving the industry on how to implement alternatives in a portfolio? Because I think many advisors have kind of clicked into the idea that they need to be doing this and their clients need this in their portfolio. But then it's sort of, well, how much and which strategy and which manager? And I think there needs to be far more guidance in terms of the implementation. So that's probably the 2.0 on the roadblocks. And we've talked about the technology piece, because once we get advisors to make that shift, you don't want to frustrate people with the process that it takes to invest in the product. So that tech piece is not going anywhere quickly.
We're speaking here towards the end of October. What do you see for the rest of this year, for next year and beyond, in terms of the private market space for wealth managers?
Yeah, and I think there's some good news here, right? The economy, at least in the U.S., continues to surprise to the upside. With interest rates high, we are in a very different environment. And I think, at every conference, certainly I attend, the eye of the market is on, in the private market space, is on private credit. as a particularly good area to be invested in today. And the other spot would be, I think fortunately for us would be infrastructure. And I think that's a function of inflation being higher in the medium term, and the fact that infrastructure does tend to have an explicit or a link to inflation that's very strong through regulation or through contracts. And then I would say within that infrastructure space, the energy transition, has emerged as one of the biggest investment opportunities. And, it's not just the infrastructure managers that see that as a big opportunity. I think private equity is starting to turn their attention to the energy transition, the sheer scale of capital that's required from the private sector to ensure that transition happens in a lower emission way. Is creating a tremendous amount of opportunity combined with the policy support that we're seeing from corporates and from governments around the world.
If there's one key takeaway that you'd like to leave with our audience of advisors about how they should assess the risks in alternative products, address the concerns they have about liquidity and complexity, what would that be?
I think the key point here is that just recognizing that the world has changed. Equities and fixed income have become correlated again as they were, 3 decades ago. And alternatives are not going to be appropriate for every single portfolio, but for those that can afford some liquidity, and again, recognizing that the perception of the need for liquidity can sometimes exceed the actual need for it. I think what I would say is don't fear it, don't fear the complexity and the illiquidity, because private markets can play a role in portfolios that allows your clients to get that diversified source of growth and yield over the longer term. It can dampen volatility. It can get them exposure to a huge part of the market that they otherwise would not have exposure to in terms of growth and yield in those public markets, which are ever more concentrated. So, I think that would be sort of the last point, is really just the world has changed, and let's go on the journey, because we can do this together to provide more durable portfolios going forward.
Well, we will include in the notes that accompany this podcast a link to the Macquarie Asset Management homepage. I'll also include a link to the podcast that I did with Andrea in November of 2021, as well as a link to be able to get a hold of Andrea and her team to provide the kind of feedback that she's looking for, or to be able to just ask questions. Andrea, is there anything else you'd like to add?
No, Bob, I think that covers it. Thanks very much again for having me today.
You're welcome, and thank you for listening to the Gaining Perspective podcast with Bob Hoopsher, today featuring Andrea Mody of Macquarie Asset Management. To support our podcast, please share, subscribe, or leave a review to help make our podcast more findable for your friends and colleagues. You can subscribe to Gaining Perspective on your favorite podcasting service.